Well, market is up quite a bit today. We had a monster day on the equities here, and you can see all across the board, market is up quite a bit. But many are probably wondering at this point, isn't this too fast, too much? Is this rally sustainable? Are we going to see a fast, abrupt decline after this kind of move? Aren't we completely overbought at this point, or can we continue to rally higher? And that will be the question that we're going to be answering in this video coming up right now. Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. It's been a fascinating week. Pretty much last couple weeks here, market rallied very quickly ever since the mid-May here. So you can see that ever since then we saw that big gap up, and it seems that ever since then market has been really thriving to the upside. As you can see, S&P 500 is up about 2.5%. I think at one point though, S&P was hovering around at 3%. NASDAQ was pretty much, even at open, NASDAQ was pretty much flat. I think, but throughout the day, it was able to manage to get 2%, Diamond around 3% today. Russell 2000, I think at one point it was hovering around at 5%, but managed to close just shy of 4% there. Semiconductor, doing okay there, but the banks opened up with the 5.5% gap up, and then it got faded a little bit, hovering around 4% throughout the day, and then kind of got a little bit fade towards the end of the day. So today we're going to be looking at all the indices here. I've decided not to talk about some of my equity holdings. I just want to spend a little bit more time on the indices, because I think it's important to kind of do a more extensive analysis on the indices, trying to forecast what we could potentially face going into next week. We'll look at gold and Bitcoin as we always do, but let's focus more on the indices today, on the equity indices. We'll go from there, right? So let's start with the spider, and let's try to figure out at this point, is this rally sustainable, right? Because I mean, since the lows, March lows, right? This is the March lows right here. S&P 500 is up close to spider, right? Spider's up close to 45% in just little over 2 months. Little over 2 months, S&P 500 performed 46%. And that is a very fast performance. That's very fast accumulation. And market had seen, you can see that how we did see that consolidation. We had one consolidation, and that was a pretty, I have to say that was a pretty solid consolidation, because we stayed here since early April till almost late May. So it was actually a good, well drawn out, prolonged consolidation for the bulls to absorb a lot of the volatility and then push higher once again, right? And we've been talking about all of this through our daily update videos. And so I think what makes this trend strong is mostly because of the fact that we rallied, right? We saw straight plunge in March, and then we rallied. And I like that we saw this consolidation. I think that makes it where this rally is very well strengthened, right? So even if we see a pullback, I don't think this, even if we see let's say we see a sharp decline going into the next couple of weeks, right? Even if we see that, I don't believe it's gonna go any lower than like 290. I mean, like, the worst case scenario in my mind will be filling this gap, and I don't even think that at this point, I don't even think we'll go that deep. But I think, I don't think, even with the steep decline, I don't think we're gonna get any lower than 2 290. Worst case scenario, filling that gap at 285, but I don't see it happening at this point. And I think if it would have been pretty much went straight up, like just really straight up move, right? I think at that point it would have been much more vulnerable, I would say. But for the fact that we grind here and consolidated, and then we saw another leg up, that's a well-established trend. You got up, it held, consolidated, digested its gains, and bulls are fully rested, and then we made another leg higher. I think as the buyers took that proper step, recovering from 35% decline back up, I think that made it more sustainable in the longer term. So let's look at the short term here, going into a 65-minute chart. Kind of following up from what we talked about yesterday. So we see a gap up, and I was completely wrong because I told you guys that I don't think we're gonna see, you know, gap up is gonna be more than 1%. We saw 1.87, almost 1.8% gap up. So I was expecting maybe, you know, 0.7, 0.8, maybe a 1%, but I definitely did not anticipate that. And this market is full of surprises. This is a reason why we've been talking about this. When I say benefit of the doubt goes to buyers, when shenanigan happens, it favors the buyers. It favors the buyers because, right, ever since we broke out of that, ever since then the trend was up. So even though, as we've been, you know, talking about, even though we were dealing with overbought sentiment here back in June 3rd here, market was able to bring it up hard. So let's check out that oscillator, what happened to that oscillator. And you guys remember, you know, that I was talking about in the last couple of weeks, that as the market, and this is another clue that we talked about last couple of weeks, when you see the oscillator, when you see my oscillator cultivating higher lows like this, we've never seen this happening this entire rally since the March. We started to first see this signal in late May, which was here, and ever since then we've been covering this every single video. And the main theme about the video was that the market is preparing. You guys remember that market is preparing to get into the second gear, the next level. We're gonna see a move that is gonna be, you know, that they're gonna speed up the move. We're no longer getting to a kind of a choppy, sideways, lethargic move like we've seen in late April, mid-April, and all throughout May, right? So we've established that, and we are looking for a move as the market is getting to the next gear. And you can see, even when we saw that oscillator curling down, this is what we talked about yesterday, we didn't even come all the way back down to retest that rising support on this oscillator. Instead, we even stopped very short. And we talked about the possible scenario of this happening today. So you can see we now saw this oscillator showing that bullish signal. Remember when I made an example of this? You saw what happened here, right? We saw that cross, and that was right here, right? And you can see we were able to see another leg higher next day, and we're right about here. We're right about here. This tells us that in the short term of things, looks more like a controlled pullback here, maybe buyers taking some profits, but we're not seeing a whole lot of selling towards the end of the day. I mean, pretty much last 4 hours, because most of the move happened the first hour on the gap up, and then we did see a follow through on the second hour, and then third, fourth, fifth, sixth, we kind of grinded sideways and then declined a little bit, but we did not see any kind of significant sell-off. And then we saw that even though we're seeing some grindy move towards last 4 hours, you can see that my oscillator on my 65-minute chart, it crossed back up. That means bulls just created, even with that big monster gap up, bulls just created themselves little bit of room for the next move, right? Now you can see that there's a little bit more room here, and that's gonna be tomorrow, Monday, at least first half day, first 3 hours of a day of data. That is, bulls can able to still push it up. You can see right there, bulls can still push it back up, going back to that level. And as it does that, you can see my oscillator continues to cultivate higher lows, right? And as it does that, the move gets faster and faster. That's what we've witnessed last couple weeks, right? And we've been preparing for this, right? So at this point, and I think we want to continue to give benefit of the doubt to the buyers. We have more room now. Bulls have created more room to move to the upside. So I expect another first hour, 2-3 hours of bullish run first thing on Monday morning. First thing on the Monday morning, right? So let's go back to the daily chart here. A little bit of maintenance. So there's a gap here. So let's do this. So let's put that gap. Let's remove that. I want to put this right there. I think that's an important level, right? Definitely that 311 level is important, right? The 311 level. That level, that's a prior resistance. We barely, and this is kind of what we talked about also. A lot of times when bulls don't want to deal with this resistance, and we talked about 311, 313 being that prominent resistance. Everyone can see that this level. Everyone can see this level. Everyone know that this thing got up or came down, got up, and that was at 313, 311 level. And then I think also at the same time, everyone can see that market rallied. Market rallied since the May lows about 12%, and it's been kind of going up almost every single day, right? And for about 2-3 weeks, we rallied. So I think everyone was looking for a pullback, especially for the fact that we are at that prominent resistance of 311, 313, which was that level right there. And I think with the gap up today, bulls did not want to deal with that resistance. Bull did not want to see a pullback. And also there might have been a lot of bears kind of jumping back in Thursday, waiting for a pullback right on that prominent resistance. And with that big gap up, forcing bears to cover. And I think that's kind of what happened today. So this is why when the trend is higher, you always want to continue to give benefit of the doubt to the buyers. And all your trades and you know, risk management, all of that has to be based on that connotation that market could potentially keep going higher. You may see a pullback, and you never know how short term that pullback might be or the steeper the pullback's gonna be, right? At this point, you're just trying to short it here. There will be a just total 50-50 guess at that point. At this point, yes, we are extended, but as we talked about on the 65-minute chart, there's still a little bit of room. And if I actually go to daily chart oscillators, this is daily chart oscillators. Daily chart oscillators, we are getting there. We are getting into overbought level. You see that? But here, I want you to keep in mind, just because we got into overbought level, sometimes doesn't mean that it has to roll over. I want you to pay attention to this right here, right there, right? There's some up and downs. You see how this thing kept going higher? How long has it been? Has that been October 23rd, November 20th? So that's about a month. This move, month. 1 month. This is a daily chart. This oscillator, stayed sideways, and that kept grinding higher for whole entire month. So keep that in mind. When the trend gets strengthened, it can keep grinding higher and higher and higher and higher without pulling back. And many times when the pullback happens, it can be quickly bought. Because you know why? Do you know why that this market isn't going to come all the way back down to March lows? It's not going to happen. Do you know why? Do you want me to explain to you why? It has nothing to do with fundamentals. It has nothing to do with economicals. It has nothing to do with whatever news you're hearing on TV with the COVID-19 virus, that whatever you're seeing here, it has nothing to do with it. I'll tell you why we're not going to go all the way back to March 29 or the lows of March, the March lows, right? Here's the reason. I'll tell you exact reason why. The reason is this: because right now there's so many people on the sideline with cash. They've liquidated their entire portfolio somewhere at these levels, and they were kind of trying to wait it out. They're thinking that this is going to be turned into some kind of Great Depression or bear market. So they completely liquidated their portfolio. They're waiting, and they were not able to put that money back into the market, many of them. Second, there are a lot of bears. A lot of bears waiting to see any kind of pullback just so they can cover. They're looking for anything at this point, see if they can get anything for those shorts. So any kind of significant pullback, some size of a pullback, they will be rushed getting out of those shorts, right? So because of that, when we start to see a pretty decent pullback, those people who've been waiting to deploy their cash, they were not able to do it. Now the market is thriving. The NASDAQ is at all-time high. Semiconductors is almost getting there. And you can see Dow and Russell and the banks who's been on lagging indices catching up now. S&P is only 5% away from the all-time high. They're dying to deploy that cash. So when we see some steep pullback, what's going to happen is those people who's been waiting on sideline, they're going to buy stocks. And those bears who's been trapped short, they're going to cover, trying to grab whatever they can get with those shorts. And because of that, there will be no way, unless there's some kind of alien invasion or something like that, there will be no way at this point this thing is coming all the way back down to 220. It won't happen. There will be too many people eager to buy on the dip and too many people eager to cover on their shorts. So every kind of decent size dip will be bought. And somebody like me, right? Somebody like me who's been long and I've been taking off my longs, and I've done that today also. I took off, a lot of my longs, more of aggressive positions, my call options, some of my triple shares that I've been long since the, March and April. I've been closing a lot of those today. So what do you think I'm going to be doing? And some of the stocks also, some of the stocks that I've owned for a while, and I saw them, rocketing higher for the last couple months. I've also closed some of them too. So what do you think I'm going to be doing? Somebody like me is going to be doing when I see a pullback from here. Let's say market pulls back from here. Let's say 5%. And if you think 5% is a pretty decent sized pullback, because we have not seen a pullback that big in a while, right? About a month, we have not seen that kind of pullback. If we see about 5 to 6% pullback, well, I'm going to start buying up some stocks. I'm going to start buying up some maybe call options on the indices. And while I'm doing that, we're going to have a cash people start deploying their cash to buy stocks. Maybe Uncle Buffett will come and buy some bank stocks more. Maybe get back into Goldman Sachs again, because Goldman Sachs is up like 25%, maybe 30% now since his exit. And then we're going to have like shorts probably dying to cover, right? And let's say they were shorts. They were put out, or they're bears who went short here. And then early next week, we saw about 5 to 6% correction. At this point, bears are not looking to hold their shorts for the next Great Depression. They're going to take that 3-4% profit to the downside on their shorts, and they're going to take that profit and run. They're going to start to think that, well, you know what, this market, since March lows, it has not been profitable to hold more than 3-4% downturn. So they're going to start covering. So then what's going to happen? Then it's going to get back up. You see what I'm saying? It's not always. I don't know why so many people are so obsessive about narrative and what's happening. Do you really think market gapped up today because of the jobs report? No. Do you know that how many times a jobs report came out every weekend or Friday or Thursday, and market kept March higher anyway, and it was a horrendous. Market was already, I will explain to you why with a big gap up. Market was already in an uptrend. They were still, their market in the streets, there were a lot of optimism in the market. Market just needed any kind of excuse to bring it up hard. So when we saw a very positive jobs report today, that was good enough excuse for people to start flocking in this morning. That's what created a gap up. But I remember a month ago, 2 months ago, everybody was waiting for it. A lot of bears were waiting for it. The jobs report was going to come out this Friday, this Thursday, and then the market is going to tank. It didn't. It didn't, even though it was horrible. The numbers were horrible. I remember market was up towards the end of the Friday. So it has nothing to do with that. Market was going to do this anyway. It just needed some kind of excuse. So today's positive jobs report, right? People all jumped in, and we saw a big gap up. Do you understand? Right? So, I'll give you these two levels, right? Short-term level at 316.90, and then the gap fill at 311.49. Bears, if they really want to kill this momentum, I know I've said it a lot, but bears are not able to do this. Gap it down, turn into island top. That will be it, and we'll follow up next week if that happens. So if bears can bring it down, turn this into a gap up, gap down situation, and maybe make that into a kind of a trap. If the longs were too zealous here to chase this, because I wouldn't chase it up here. If I wasn't long at all, I would never chase it up here. I've closed out a lot of my aggressive positions, right, today. But there are people who chased it. And if market feels like there are too many chasers here up here, market wants to punish them by gapping it down Monday or Tuesday. Maybe Monday we see a decline day, and then retest at 316.90, 316.90. And then if we see a gap down on Tuesday, that becomes island top. This thing for sure at that point will come down to 300 and 299 and retest that rising pivot. And that rising pivot is going to act as pretty solid support. Pretty solid support. Excuse me, guys. Okay. So anyway, and in that vicinity, you can see we got a couple moving averages hanging around that vicinity there. We got that two longer term moving averages in that vicinity. We got the rising pivot there. We got I think that's 20 EMA, 25 EMA there. That's all hanging out. So that's going to act as pretty strong support if we do come back down. But also keep that in. But that's a possibility. But at the same time, we want to continue to give benefit of doubt to the buyers. Because we may see a pullback on Monday. And then we see a support at 316.90, 316.90, and then just do this and go fill this gap at 330. That's a possibility. I mean, how many times do you think people were thinking the same thing here? We saw a gap up, looked like next day it faded a little bit. And then we talked about this on our daily videos, that bears really want to bring it down. They need to gap it down, make this into an what? Island top, and then maybe come back down and challenge this gap. Remember we've been talking about that on my daily videos? that never happened. We kept grinding higher. We kept grinding. We kept grinding. We kept grinding higher. And every time market kept moving, every bear out there was waiting, shorting to see what? Some abrupt sell-off, ignoring the uptrend. And when you see established uptrend, this is what the market is capable of, despite the fact that what you see, what you hear. You see what I'm saying? This is the reason why for the last, I don't know, 2, 3, 4, 5, 6, I've been saying we have to continue to give benefit of the doubt to the buyers. Continue to give benefit of the doubt to the buyers. And today, are we extended? Yes. But I still have to say, because trend is up, we have to give benefit of the doubt to the buyers. Do you understand? Let's go to NASDAQ here. I'm not going to spend too long here. NASDAQ just poked his head up above the all-time high. After suffering 30% decline, we are making new all-time highs on the Qs today. That's not bearish. That's not bearish. I want you to go back and check. When you see NASDAQ, go back as far as you can. When you see NASDAQ goes down 30% and then goes back up to make all-time high, was there ever that thing come down and making new lows? That has never happened. Never. It's not going to happen now, right? If this thing was going to turn into a bear market, we would have done something like this. Like that. Like that. But that's not what it looks like. Even if we see a pullback, remember the same logic applies here on the Qs. How many people are sidelined right now just waiting to deploy their cash, right? There will be people wanting to buy that dip. So you see that pullback, people will be flocking in to buy that dip. You see that pullback, the bears who's desperate to get out of their shorts, they'll get out, right? Bears who got short today at the close or throughout the day, we see about 3, 4, 5% correction. They like to take that, they'll take that profit and run because they understand that it wasn't profitable to hold short too long in this market. So they're not going to hold for 2 months, man, 3 months, 4 months. That's not going to happen in this environment because they've been burned too long. So any kind of decent sized pullback will be bought. And I will be buying that dip, you know. Let's go to diamond. So diamond, here's many good things happen on the diamond. I'll tell you what happened today. First of all these down gaps been filled. Look at all these down gaps. Bull's been doing a great job filling all these down gaps. Today, fill this gap. That's a good thing. And we kind of opened up kind of like an island reversal because there was a gap down. It's a small gap down. You know what? Let's not call it an island gap because that was a kind of a small gap down. So let's just mark it as a gap, not like a island gap. Right? So that's that. And I want to give you 150 as that gap level, and then 145.41 as the the gap fill area. So again, same logic applies here. Russell 2000 obviously a little bit more vulnerable compared to. Did we talk Dow? Oh, we skipped Dow. Let's go to we skipped Dow. Let's go to Dow. So, wow, Dow's up a lot. Dow really caught up here. Dow's really caught up 0.7% year to date, -7% year to date. I remember at one point Dow was like, 2-digit negative, like 15% or something like that. Last time I looked at it, Dow caught up quite a bit. Let's annotate some of these gaps here, there. So a lot of these, you know what? Dow kind of did have a island, kind of had an island reversal though. Island gap though. But when island gap is formed after the move has been moved like this, it kind of loses its potency. Like this one was island, right? This is gap down, that's a gap up, right? So that has a pretty strong island gap. That's because we saw that move pull back and then we saw the island gap. Well, this gap, we're gonna make it into green because that's an island gap, because remember it closed there and it opened here. So there was a gap here and that's an island. But it happened or occurred after the move. That's a significant move. So it loses its potency because of that, but we'll still mark it as green for now. And then we'll put that my dog was dreaming. So we're just right on that. We're just right above that 270 resistance. It's a good thing that it gapped slightly above this resistance. You see, if it would have gapped halfway, it would have just went up, fill it, and you would have kind of tanked, you know what I mean? Like it would have been, because then this would have been resistance. It's staying up above that level. And that gives slight advantage to the bulls, right? And what I want to do, kind of want to throw that rising pivot here also. I think that's a good rising pivot right there. That's a good rising pivot right there, right? You see that. You see here, you see that. So that rising pivot right now is irrelevant. I put that rising pivot, that blue dotted support level there, rising support, just in case there's a shenanigan, like there's a gap down or something like that, or abrupt sell-off next week. That's definitely the level that you want to look for support. That's going to be a strong support. But this island gap, if the gap gets filled, it's going to be strong support. If bears want to do any kind of damage at this point on the Dow, you do not, you just coming in and filling this gap, it's going to be incredibly bullish, because look at all these moving averages here, right at the level which is coinciding with the island gap. Do you see that? Right? So bears come and fill this gap, it's just going to make bulls, let bulls rest a little bit, and they're just going to bring it up, and then next it will go back up to about 380. Only way bears can truly do some damage, I think, at this point on the Dow will be gapping it down, turn this to an island top. Then I think at that point we might even get to this level right here, 250. That's a great level of support, just slightly below the rising pivot, just in case there's some weak bulls out there, So that would be kind of what I'm looking for here. Those are the levels. Russell 2000. So Russell 2000 made a huge progress. I'm actually very curious how much it got up there. Wow, that's almost 60% move. That's almost 60% move. That's a big move. And Russell 2000. So you can see it's a slightly different look, where S&P 500 here, well above these long-term moves. Do you see those thick moving average? Well above those long-term moving average. That's bullish in the long term. NASDAQ, long time ago, well above those long-term moving averages. All those are bullish in the long term. Dow, just today, we got above these long-term moving averages. That's bullish in the long term. Russell 2000, we got above one long-term moving average, that blue one, but the pink one, we're just right at it. So we're slightly disadvantaged on the Russell 2000. So, and that's 11. Also, Dow gotten above this swing high. Russell's actually trading just underneath that. That's slightly bearish. So I think Russell 2000 bulls want to hold these gaps right here. Obviously, bears coming down, filling the gap is going to act as support. So gapping it down will be the best decision if you want to do some damage. If not, as of today, right now, we want to continue to give benefit of doubt to all the indices that we're going to cover today. Spider, Qs, Diamond, Russell, Semi, and the banks. Let's go to the semiconductor here. Semiconductors at all-time high. And there's a gap here. There was island gap here. Let's turn that into green. Right? There was a gap down, that was a gap up. That's island gap. Look at how many gaps that wasn't filled. I'm gonna put this right here. I think that's a that's a good pivot. That's a good pivot, right? Put that there, but there's a lot of these gaps are gonna provide support, so I'm gonna put another one at 146. I'm actually gonna remove 138. I think it's gonna be difficult to get from here. They got this gap, they got this gap, so I think, and let's put one right here, so 146, 143. So look at all these up gaps that was never filled. And you guys remember, we've been tracking gaps every single day last couple months here, and the longer they stay open, the better it is. Same logic applies on the semiconductor, right? Semiconductor suffered what? 36% correction. When was the last time you saw semiconductor correct 36%? It gets back up, makes new all-time high, and then it crashes, make new all-time or new all-time or new lows, breaking below that prior low. It has never happened, right? I'm talking about within that same year. Maybe 2 years later, 3 years later, that might have happened. But in that same year, this year, it's not going to happen this year. So same logic applies. Are we extended? Yes. All the indices are extended. Does not mean it cannot go higher. We want to continue to give benefit of the doubt to the buyers, right? That's kind of what I'm saying. And then earlier in this video, I've explained why they're not going to let this thing all the way to March low. Remember that? I explained that. There are too many people eager to get in. There are too many shorts eager to get out. Let's go to the banks. So banks really jumped today. I was actually very, very pleased to see that. I had a lot of XLF calls from down here and had a lot of bank stocks. And I was talking about it openly. And so I was closing a lot of those out today. And I was extremely pleased to see banks seeing a huge move. It was up as much as like 5% at one point. And look at this, that gap right there. That's a pretty pure island gap. So there's a gap down, there's a gap up. So we're gonna make that green. And this kind of reminds me of semiconductor, right? So semiconductor right here. Remember, we saw the gap down here, gap up here, continuation. XLF. We're seeing the same thing here. Let's pull that there, but we do still have that down gap that still needs to be filled. So that's gonna be acting as resistance. So bulls will need to go up and fill that. Let's annotate this one right here. Yeah, there's this island gap that never got filled. Let's move that there. And put that, there's some gaps there. So we got gap here, 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 here. So, okay, so we got that. Let's look at the moving averages. Okay, so still we're below these long-term moving averages. So only two index that we looked at today is the Russell and the banks below these long-term moving averages. Every other indices, Spider, Qs, Diamond, and Semi, they're all above the long-term moving averages. Russell and the banks, they're a little bit lagging, and you can see it here in year-to-date performance. Banks still down 17% year-to-date. Dow really caught up here, but Russell's negative 12, negative 17. So, but that's a big move just in 1 week. I think that's about 10% run there, and I think since the May lows. Yeah, that's a big move. 30% move. That's a huge move. That was some huge move on XLF in the last 2-3 weeks. That was some huge move. And I think a lot of people are kind of bearish in the banks. And also at the same time, Warren Buffett, he announced that, I think this was up down here in sometime early May, I think it was early May, that he was gonna unload his bank stock or Goldman Sachs, right? So I think that also made a lot of people very spooky about the bank stocks. And then subsequently, you can see that we did see a downturn, and that really tripped a lot of people out because that was an important pivot. That was a very, very important pivot. That was that resistance, support. We broke below it. But if you remember, if you go back to my daily video, right, back in May 15th, I was kind of bullish at it because of this island reversal gap. And because of the cultivation, right, we are still subtly in the vicinity of higher lows. You guys remember that, right? Still subtle. We don't see at that point. I didn't know we were gonna bounce next day. No, I didn't know that. What I was saying is, okay, I don't know what's gonna happen tomorrow. But as of today, and I'm talking about on this day, as of today, we are staying in this vicinity that gives me higher low perspective. So I still want to give benefit of the doubt to the buyers today. Tomorrow we'll come back and re-examine. And that was the next day. That was the next day after that, next day after that, and then boom, you see. So this is why it's important that you kind of want to understand the overall picture, not just the short-term resistance breaking and then short-term, levels. Kind of an overall picture. Remember, you guys, we also talked about how I think because of the other indices are up, it's going to help the banks, it's going to help the small caps to be propped up, not that these lagging indices to, pull other indices to come down. The large indices, the indices that's been going up, already been up, they are going to pull these laggers up. Not that these laggers bring other indices down. You guys remember that? So I think with that and then the higher lows and higher highs, I wanted to give benefit of doubt. At the time we did have these short-term moving average downturning also, right? So that's why you kind of have to look at the overall picture. Like if it was a completely different, like if XLF was like a stock, not an index, but it was a stock. XLF is a completely different stock, and QQQ was a completely different stock. I will short XLF and go long on QQQ, but I cannot do that because they're one as a whole. Spider, Q, Diamond, IWM, Semiconductor, XLF, they're different sectors, but they all make up the market. So I cannot separate them two. I cannot be shorting XLF and going long on Spider. I cannot do that because I was long on all of them because I was anticipating that, NASDAQ, the big brother, went up first, and then Spider went next, and then Dow went next, and then it was Russell. Well, it was a big brother NASDAQ, and then the Semi, and then the Spider, and then the Dow, and then now Russell and the banks, they're all catching up, right? So, are we extended on the equity market? Yes. Is this rally sustainable? Yes. Are we going to see a pullback? I don't know. But I did give you a scenario where if bears want to make a damage, they want to see a gap down. Otherwise, if they just come down, fill the gap, it's going to act as support. We're going to go right back up. Are we going to go back down to the March lows and retest? No. And I explained to you why that's not going to happen, right? Is there a chance that this market could continue higher? Yes. We talked about that. There's some room there. And then we also talked about that my daily oscillator is overbought, but there's times when the market is in an uptrend, it can keep grinding higher and higher and higher. You can see like that with the minimal pullback. So there you have it. So that's the answer to the questions there. quickly I look at gold, and I'll let you guys go with this. So gold, it's been kind of lethargic while the equity's been going up. So I do think that gold is going to continue to kind of struggle here, kind of be more lethargic. I do think that gold is a bit extended when I look at the kind of a longer term picture. I also kind of see like a daily divergence here. I think we talked about this last, we've been talking about this a couple of weeks now. So I've been talking about how I think the gold is going to be kind of, start to see either consolidation or maybe a pullback. But, they've been kind of lagging. So I want to continue to kind of expect that they're going to either pull back or lag. I'm looking for, if the gold pull back, I don't know, 150 or some this level, I'm gonna start to see if I can, because I am long on all the gold, silver, like gold, silver, GDX from before the breakout, and I did take some off up here. I think like early April, somewhere up here. So if I see a pullback, GLD going to, I don't know, like maybe retesting this moving average, I'm gonna start thinking to preparing to add more. And there's this gap here. There's gap here. Once we start to come down and fill this gap, I'll be looking to buy, add more there. So that's kind of what I'm thinking with gold. Quickly with the Bitcoin, had a nice job getting back up, but again, it's taking too long here. It looks like it's getting a little bit tired because it's already tried. This is first time trying getting above it, failed. Second time failed. Third time and fourth time there. So if we don't see a breakout quickly to hit 1347, this thing might come down to 8. So that's kind of what I'm thinking. We need to see a breakout quickly there. So there you have it. Hopefully I hit every spot, but I do want to do extensive analysis for you guys today on the indices. So there's so many people out there continuing to say things like, okay, highest unemployment rate, I guess that's bullish. Rioting, oh, I guess that's bullish. All these problems we're going through, I guess that's bullish. COVID-19, I guess that, people say that. It's just because they're bitter. They say that because they're bitter, and people continue to say that this market is completely disconnected from the reality. No, it's not. Market is never wrong. Market is never wrong. Market projects next 6 to 30 months out. Market is already seeing that things will get better. Vaccine will come, right? That's why it's not about you trying to understand why. It's not about you trying to sound smart with your arguments or analysis. None of that matters in the market. What matters is you profit. You understand what the market is doing. You make a right decision on your bet, and you profit on that direction, on that trade. That's your job. Your job is not go on social media, argue with everybody why market shouldn't be up here. Trying to sound smart with some 50 tweets about long, drawn-out thoughts of why market shouldn't be up here. That's not your job. That's not your job. Your job is to profit. Your job is to get into trade. Make a correct decision on a trade, on a direction, and execute that trade based on your system, based on your plan. That's your job. That's your job. If it was so easy in the market, why can't anybody be rich trading in the market? This is a reason why most people fail. This is a reason why market always fools the majority. Market already fooled so many people in the market. Market already fooled 95% retail traders. Most people didn't even dare to think that market could be at 320 just a few months later, right? So you should, if you were on the opposite side of a trade and you were not able to profit from it, and this became a very painful months for you, then instead of being bitter and trying to, blame the feds and everybody else but yourself, it'll be better if you tell yourself that, okay, I must have done something wrong. What can I learn from? Because if it costs you a lot, then you should be able to learn something from it. You should turn that into a teacher and at least learn some from it. So at least something like this happens again in the next time, then you can able to profit, right? Anyway, so hope you guys have a wonderful weekend, and I'll come back to you on Monday. We'll do daily update video. We'll look at the S&P 500 65-minute chart, and we'll follow up on this gap area here, and we'll go from there, right? So you guys have a long, relaxing holiday week. Not holiday. I feel like every day is weekend. You guys have a long, not long, but normal, regular holiday, not holiday, but weekend. And good luck trading next week.